Well, good day, all. Ira Epstein with your financial market wrap-up, and this wrap-up is for Monday evening, and we're on the 24th of April, 2023. It's cold in Chicago. It's getting on right now. In fact, at, 6:25 in the evening. So tomorrow we're going to see possibly President Biden announce his candidacy. He's rerunning. It's not very popular amongst the Democrats and amongst a lot of the Americans. On the other hand, he's going to be running probably at this point against ex-President Trump, who isn't popular either. So it's going to be a contest of who could be least popular, as I see it. I mean, I understand Biden. I understand. You realize how old he's going to be if he serves out his 4-year term. All right, he's 80 now, and that's, a year and a half away. 86. There's a limit, okay? And I think that there should be a limit on elderly politicians, and we should be getting the younger people, whatever that means. You got Dianne Feinstein. She can't serve right now. She's holding up the judicial area. I mean, there's a lot of wrong things here. And, for the good of the people, and that's what they run, should they really run again? Is it about them or the people? All right. Energy markets sort of wobbling here. Tonight in my full research report for my subscribers, I go into the Russian part of this deal, OPEC Plus. They have not cut their production according to Bloomberg's reports, and they did in-depth studies of it. Through just this past week, their exports, if anything, are up, not down. So who's eating this? I guess it's OPEC. How long will they do that? I don't know. How many of them want to cheat if Russia's cheating? I don't know. When you see how the oil is maneuvered around, how we end up in America and other parts of Europe, actually the oil goes to one of the India or another country that buys it. They refine it. They put it back on the open market. You're buying basically Russian oil, and they who made the profit? These other countries that are willing to buy that, and Russia, and that's what makes the war go, right? Something should be done with all that. I'm not smart enough to know what that is. When we look at the stock indices, have you noticed the volatility suddenly come out of the market? If you haven't, pay attention to it. It has. It's like the market's waiting on the earnings, so the individual stocks are getting their bumps. We saw First Republic. They lost about $100 billion in deposits. That includes, if you throw in the $30 billion they got from some of the banks. I don't see how somebody wants to rush and buy them. A lot of the loans that they still have only pay interest. They don't pay principal down. I don't know what that means to anybody, but it's not the best scenario you can get. And what were the properties that were behind a lot of those real estate loans, homes, whatever it could be, to wealthy people? Are they worth more or less? I don't know that either. But nobody's rushing to buy them, so I think we're getting an idea that the balance sheet stinks. All right. Otherwise, somebody'd reach out and buy them. Dollar basically lower, foreign currencies getting a bid. I want you to be concerned about the Japanese yen. I thought about this over the weekend. All my work is still bearish, yet I was telling my clients today, I think it's time to come out. And the reason is I'm walking into an unknown. We have a brand new bank governor. He's liable to want to put his fingerprint on things. So he's liable to make a statement that the market's not used to. Now, generally, central bankers don't do that. I don't know this man, all right? I don't know much about him at all, and I've read a lot. But he's just liable to say, yes, we want to get away from this easy money policy. The market's not expecting anything like that. If it gets it, you can get the market reacting the wrong way. If he holds the line, if everything's read through and that's there, there'll be another opportunity. So I was telling my clients today, you know something? It's probably a good move to walk away. What else going on? I think the market's enamored with May 3rd, which is right around the corner. The last trading day of this month is on Monday. And then on Wednesday of a week from this Wednesday, we get the FOMC meeting. The market is solid into the 25 basis point rate hike. They're solid now for central banks of the Bank of England, going 25 basis points higher. The market is solid at least 25 basis points out of the European Central Bank, maybe as much as 50 on that. So the banks are still moving themselves up on this. Obviously, that hurts if you're trying to understand how does this all play out in the world economies? And that becomes the problem because everybody's trying to fight the inflation. And I want to say this very clearly, properly so. You've got to put that genie back in the bottle. And I know you're going to say, rightly so, that they will overdo it and they will cause the economies to tip because that's typically what happens. Trying to figure out the lags, getting the timing right, turning that ship in a way that's slow moving but never ending on that turn is very difficult. So the best guesses out there are for recessions that are shallow because underlying it, employment is still running strong. I did a piece, Bloomberg asked me today to do a piece for them on the rise that we're seeing in some of the unemployment claims. Is the resiliency breaking? Go on to TikTok with them and you'll see my piece. All right, in the S&P 500 index, we've got a market that has just gone flat. And that's what I'm saying. The volatility's come out of the market. This is just an area chart of closes. But come on, folks. Look at how it's just drifting right there. On the bar chart, you see it. It's no longer these big moves here. They got narrower and narrower, and they're still narrow. Be careful. Narrow markets, all of a sudden you get a piece of news. We have an awful lot of earnings coming out tomorrow. First thing in the morning, we get everybody from GM to McDonald's and so on. And then in the afternoon, I think we get Alphabet coming out. We got Visa. There's so much coming out here. You want to pay attention. The big boys are coming out with guns flying. Then we get to the micro mini on the swing line. Now, this brown line is an indicator that I developed. And this indicator helps you to take a look at a chart at any point and say, is it in an uptrend and a downtrend or a downtrend? You're looking for the valleys and the peaks. And an uptrend is higher lows. You certainly got that, higher highs, until you broke that low. Then you had a higher high, lower low. You're out of the uptrend. I mean, can't it be simpler? I devised it when my son was 13 years old. Told him he'd be able to sit down with anyone, anywhere, and tell them if the market is in an uptrend, downtrend, or no trend. Then he can also tell them if it's in a trend, what's the risk associated with it, up or down. This is the tool that I used to give him that. It served very well now for 26 years almost. When I take a look at the market, what has it done? Here's basically the story. The market was in a nice uptrend and went into a pause. It has fallen back against what I call the red line, the line in the sand, the 18-day average of closes. When the market's under it, you have downside bias. When the market's over it, upside bias. It is very typical that markets that try to figure out a trend play at that number and then eventually get it. If you have a downtrend, it's not unusual to challenge the upside. If you have an uptrend, not unusual to come back down and see what's right there at the support level. That's what I think is going on. Has it set up something new to do? Not that I can see. What else is going on? Do you see the black lines in the Bollinger Bands? Bollinger Bands are an algorithm designed to keep the market trading within them 95% of the time. So the logic is the first time you hit the upside, you're in deep resistance, support. The first time on the downside, upside. Resistance, support. And when they narrow in, what the market often does is it goes to the 18-day average, sits there and spins. What's happening? Traders are starting to either enter or exit the market, and it's spinning because nobody's got a real opinion in a big way as to which way the market might go, one way or the other. Momentum was lost. So when you take a look at this, and you step with me over here, give you a little secret. I teach this in my enhanced Bollinger Band course. You have a fully embedded reading. That means the red and the blue lines are going sideways over 80 for several days or more. When you lose it by closing underneath 79, unless it's regained right away, the odds are strong that before the market goes up and makes a new high, it's going to go down to the closest main moving average. In this case, it's very clear. It's the red one, not the 100 or the 200 right here, that one. Market's still playing with it, and finally, the market gets to it. This is today. So as far as I'm concerned, your downside target has been hit. You're back into a neutral stance. The market's got the bias up, momentum pointing down. The trend is void. You have a higher high, lower low. So what do you have in the NASDAQ? A downtrend at this point. Why? Lower highs. You have an outside day to the downside. Lower highs, lower lows, potential target 12,970. But what was today's action like in the market? What was the low today? It was 12,967, and 12,950 is the Bollinger Band, and that number's just moved up actually over today's lows, if you think about it. And look at how narrow the trading range is getting. This is when you run from markets. You don't run into them, you run away from them. This is just spinning, and you get false moves. A lot of the times, upper Bollinger Band, lower, and you don't go anywhere. What about the Dow? Well, the Dow's back down. You had the embedded reading. You lost it. Tell me the number that it's challenging right there. Could it be clearer? Now, you had something bullish happen on this chart. Uh-oh, what do I mean by that? Follow me. This is the action right here on Thursday. Notice how the red, the 18-day average, is under the green, the 100. Here you come, and there closes over it. So now what does that mean? In theory, until the market closes under these averages, this target is an upside target. But do you have a trend here? Not really. The market got down today to 33,776. Did not hit the 18-day average of 33,770. It's overbought. It cannot re-embed automatically. It's 2 days where it's lost it now. I think you're just going to spin and go nowhere. Even though you got the bullish crossover, which tells me down the road, I think the market owes that number right here. It's of no interest to me because momentum popped. It went away. Upside momentum. In the Russell, you are stuck. You never did embed. You've locked into the 18-day average in the narrow Bollinger Bands. This is what I tell people you run away from. You don't try to be a wise guy. This isn't what I'd call positioning it. What about the big break in the bonds? The first challenge of a major moving average. How often do you hear me say that to you here? The first time you hit a major average, it's often a problem for the market. Now, we only started collecting this right here. This market easily got over the 100 days. So that argument I have, it should have fought there, did not work. It got over and it just stayed over. Now the first time it's coming back is right here to the 100, and that's where I would think the shorts want to cover because the market hasn't been under it in a while. The market is oversold. It's logical to cover there and then say, okay, the resistance is going to be back at 131.19, the 18-day average. And until you get back over this high, you've got lower highs, lower lows respecting the support of the 100-day and potentially the resistance of the 18. What about the 5-year note? Identical. The same way. Oversold right into it. Run away from markets like that. Now in the dollar index, it's trying to establish higher highs, lower lows, and coming back into a downtrend. And in the euro, what do you think I'd be telling you to do? Is you have a market that's got an uptrend, the first challenge of Bollinger Bands. Now, what was the high of the Bollinger Band coming in? It was 110.80, let's call it 88 and a half. And today, 110.85. I consider that pretty darn close. I think the pros are coming out. It's ideal when you hit the number, and that may even happen tonight. We don't know what that'll do. Let me come back to that for you. But I think that up here, the pros are taking money off the table. In the British pound, the bulls have won the day. Higher lows, higher highs. And it looks to me like the Bank of England, as much as they don't want to raise interest rates, we keep hearing that they allude to that. They don't have a choice. Inflation's so sticky there is no choice. Therefore, the target to me looks like the upper Bollinger Band in this market. Bitcoin. So now 25,000 is the new 30,000. What do I mean by that? We went up here challenging the 30,000 level and you came apart. You never did embed. You got overbought and you just turned down and you're caught in the narrow Bollinger Band. So again, buying a Bollinger Band, You know what I'll be? I'm broken record here. No, I would never tell a client to do that, as I would never tell them to sell a lower band. This is where you cover positions in the market. We then get to the differential between Brent and WTI, and it appears that 375 is getting a little bit too low. The market's back up all of a sudden to 394. As you can see, this market has fallen back into all these moving averages, void of a trend. Higher high, lower low, I don't see a pattern there. Same problem in WTI, nothing there. Now, could this be where we've run into a bottom area in gasoline? It's got all the earmarks of it, every single one of them. And the market's starting to act as though you're going to end up with higher lows through here and a higher high. You're still under my key number, but what number are you respecting? Do you see it or not? Let me walk you into it. Here's the market. If you come down, remember what I just said. First challenges of major moving averages. Well, you haven't challenged these since the end of March, so I'd consider that a challenge if they get down there. And what the market does is the market comes down. This was on last Thursday. Bollinger Band with that combination, deadly. That's where I think pros just run out of the marketplace. You're playing back and forth and you're trying to come up from it. I think professional money evacuated short side ideas. I'm still very much friendly for the summer driving. I know you will hear, the consumers being hurt and so on. He's fully employed. He's got money in his pocket. He may not be able to afford a lot of things, but with those kids wailing, they're going driving. You watch. Summertime, prices go up. Now, do I know from where? No. Do I know how to catch it right here? Not completely. So I'm waiting to see how the chart pattern comes together. And in natural gas rallied off of colder weather. It is colder. We've lost that beautiful spring where we're in the 80 degrees a week and a half ago. That's gone. Now we're not even hitting our norms. We're well under them. We were 32, 33 degrees at night in the whole Chicago area. That's unusual. And our highs are not out of the high 50s. That's unusual too. We should be in the mid to high 60s. So got this cold spell that's here. It's all weak, and that gives you a little bit of demand. It also tells me that the market's probably established a range now. And here's what I think. I think it's from up here, the 333 level, down to here, the 213 level, and I think that's your new trading range. So that's what I told my traders, all my subscribers, so I'm telling it to you after I've told it to them. I want to remind you that, we put out a lot of cool information for people, and some of this comes from years back when we were working this out, technical trading tips. And I don't have any idea if you know about Gann's square of 9 and what it means for stock indices, in this case, the NASDAQ. Articles look like this. Examples of everything, how you work with it. Do you even know what Gann is? You should learn it. Absolute benefits of relative strength. Now, from the time this was written, went on and started playing instead of relative strength indices. I went into slow stochastics in a very large way. It was after that article, by the way, and I just wanted something better, and I think I found it, but got to start somewhere. So if you'd like to get this information, go to our website under free offers, top left, or you can move your cursor up here, give a click, and choose from all the offerings we have. I'm Ira Epstein. You have yourself a good evening. I'm sort of bored right now, waiting to do something. You have a good day.